Hello everyone, and welcome to this episode of the Divity Radio Show, which is actually just a podcast, but since everybody's doing podcasts these days, we decided to bring back the good old radio show. In this episode, we have two topics lined up. First, money market funds. What are they? What are they used for? And some examples. Then we will dive into how to buy mutual funds on Interactive Brokers, one of my favorite brokers, and discuss the fees involved, especially for non-US residents. Okay, let's start with the money market funds. So, what exactly are they? A money market fund typically invests in very short-term debt securities. Okay, so let's simplify this. Very short-term bonds. We're talking about bonds that expire in weeks or just a few months. They can also include cash, derivatives, or certificates of deposit. The main goal of a money market fund is to provide a very short-term interest rate, sometimes even the overnight rate. There are funds specifically designed to capture the overnight rate. Usually they are composed of derivatives. But something interesting. So, money market funds have almost no volatility. Yeah, that's right. They move very steadily, either up or down, and what's particularly intriguing is that they rise when interest rates are positive and drop when interest rates are negative. Yes, you heard that right. Normally, a bonds ETF will go up if interest rates fall and go down if interest rates rise. But a money market fund works differently. If short-term rates are positive and increasing, the fund's value will climb and it will do so faster. On the other hand, if those rates are positive but starts to decrease, the fund will still rise just more slowly. Now, if the rates turn negative, like we have seen with the Swiss franc for a long time, the money market fund will start to dip. But don't worry, it's a gradual decline, giving you ample time to decide what to do next with your money. So, let me understand this correctly. Are money market funds a risk-free investment? Well, sort of. Short-term interest rates are often a good estimate for the risk-free rate, but let's manage expectations. Don't think you will get a 10% annual return with a money market fund. For example, a Euro money market fund like the X-Tracker's Euro overnight rate swap returned 3.98% over the last year. A US dollar money market fund, the PIMCO US dollar short maturity, performed a bit better at 5.55%. Meanwhile, a Swiss franc money market fund had a return of 1.49%. Okay, let's go back. So, how can you actually use money market funds? They are particularly useful if you need to keep your money liquid and your bank isn't offering an interest rate, or if the rate that they are giving to you is much lower than what you could earn with a money market fund. For example, here in Switzerland, I had a bank offering me a 0.5% interest rate, but with the National Bank's interest rate at 1.25% and the Saron rate at 1.2%, I knew I could get something near to double of that return even after factoring in the costs of a fund. Fortunately, I found another bank offering a 1% interest rate, but if they ever reduce the rate while the national banks stays the same, I might seriously consider moving my money into a money market fund myself. Think of a money market fund as an alternative to an unlocked bank savings account. Unlocked meaning you can access your money whenever you want. I wouldn't even think too hard about locking my money in a savings account when I could just as easily invest in a bond or, as mentioned, a money market fund. Okay, let's take back where we left off. But how does one actually invest in a money market fund? These funds can take the form of either mutual funds or ETFs. If you can, I'd recommend going with ETFs, like the US dollar and the euro ETFs I just mentioned earlier. ETFs are easier to trade and generally cost less than mutual funds. However, if you can't find an ETF for your currency, you might have to rely on mutual funds, which is what I would need to do for the Swiss franc, for example. Keep in mind that mutual funds are usually actively managed, whereas ETFs tend to be passive. But I wouldn't worry too much about this when it comes to money market funds. They still have a benchmark and a clear goal to provide you with the short-term interest rate. So no, they won't suddenly start buying Apple or Amazon stocks to chase that rate. Or at least I hope so. To find ETFs, you can use an ETF screener like justetf.com, which usually has a filter to show only money market funds. For mutual funds, it's a bit trickier, depending also which mutual funds you want to look for. You might need to do some Googling and research. Fortunately, for euros and dollars, you have ETFs, and for Swiss franc, I'll soon share two good options that I found. For pounds, I know that there are ETFs, and for other currencies, well, I don't know. Not really an expert on foreign currencies here. Now, before you dive in, whether it's an ETF or a mutual fund, please make sure to read the fact sheet and the key information document in their entirety to understand the costs, conditions, and their benchmark. This is really important. For Swiss francs, two good options could be the Swiss Canton Money Market Fund Responsible with ISIN number LU0141249424. I repeat, LU0141249424. Or the PICTED Short-Term Money Market with ISIN LU0128498267. I will repeat again, LU0128498267. Just be careful to choose the right share classes. Some are only for professional investors and not for retail investors. Nonetheless, the two ISIN numbers I just mentioned are for retail investors. For benchmarks, the Swiss Canton Fund tracks the FTSE 3-month Swiss franc euro deposit with a TER of 0.17% plus transaction costs of 0.1%, making a total of 0.27 in yearly costs. It also has a maximum entry fee of 2%, but no exit costs. It's interesting that Swiss Canton doesn't explicitly say that they want to charge this fee, but they do mention it could vary depending on who sells you the fund. So be cautious about where you buy the fund, because with a 2% fee, it might not make sense to purchase it at all. We will discuss the fee on Interactive Brokers in just a little bit. On the other hand, we have the Pictet with its benchmarks being FTSE 1 month Swiss franc euro deposit, and that has a TER of 0.17% plus transaction costs of 0.02%, totaling 0.19% annual costs, significantly less than the Swiss Canto. It's also 3 times bigger than the Swiss Canto. This fund has an entry fee of up to 5% and an exit fee of up to 1%, but Pictet clearly states that they won't charge these fees. Only the seller might decide to charge them. Again, be careful where you buy this fund, especially if you are going through a bank, because between you and me, we know how banks work. There are other mutual funds you could consider, but I didn't mention them because they are not available on Interactive Brokers and might only be accessible through banks, where entry and exit costs can make them unattractive to buy. Just for the sake of completeness though, one could be the UBS Money Market CHF fund. Now, let's talk about how to buy mutual funds on Interactive Brokers. I use Interactive Brokers, so that's the one I can talk about. Honestly, I never looked into it much until I needed to find a good money market fund for the Swiss franc. So, here's what I discovered. First, find your mutual fund. The Interactive Broker screener is a bit tricky to use, but if you want to try it, just Google Mutual Fund Search Tool Interactive Brokers and it should pop up. Otherwise, you can use Google, as I mentioned before. Once you've found the mutual fund, take its ISIN number and go to the IB Contract Information Center. Again, just Google IB Contract Information Center and it should come up. If you have an IB account, you can log in, click Help, then Support Center, and you should find the Contract Search tool. Enter the ISIN number, and if the mutual fund appears, it likely means you can buy it. Click on the fund name and a new window should pop up. Under symbol, you will see a number. That's the one you can use to search for the mutual fund on the search bar in your account on Interactive Brokers and subsequently buy it. By the way, if Interactive Brokers does not let you buy the fund, so if you don't see the buy and sell buttons, for example, it probably means you did not activate the permission to trade mutual funds. Contact the IB support team to know how you can activate it. There is a setting in your account to request activation. But so why can't you just use the ISIN number directly to search for the mutual fund? Well, you can, but for some reason it doesn't always work. If it does, great. If not, try the method I just explained. Now, what about the costs of buying a mutual fund on Interactive Brokers? Well, this is a good story. That's a good question. And their support team couldn't even answer. But let me simplify this to you. On their commission page, IB says that for non-US residents, buying most mutual funds costs €4.95. But do they specify which funds have different costs? Of course not. So, how can you figure out the actual cost? You can try placing an order and checking the fee estimate before clicking submit, right? Well, no. That feature isn't available for mutual funds. What about clicking on cost impact for a report? Nope. That doesn't work unless you already have an open position on the fund. Okay, here's the solution. If you go into your IB account, under setting, you will see paper trading account. Click on that and it will show you the paper trading username. You can use that and your password to log into your paper trading account. If the password doesn't work, no worries, you can reset it through your live account on the same page where you see the paper trading account username. So in your paper trading account, you can go ahead and buy the mutual fund. Keep in mind, it might take some time since mutual funds can only be bought once a day and they have a cutoff time. For example, the two I mentioned earlier take orders until 1 p.m. Central European time. So if you submit later than that, the order will actually be executed around 1 p.m. the next day. One interesting thing, just by placing the order, you can, as usual, modify it and click on cost impact. And in this case, for some reason, it will give you the report with the costs of buying. Interactive brokers, please, can you fix this? But anyways, I'd recommend going through the submission of the order to actually see the precise fees you paid on your paper trading account. For example, for the two mutual funds I just mentioned before, the fee was €4.95 on my paper trading account. Now, naturally, there is no guarantee that this will be the exact same fee you will pay on your live account, but it's very likely to be similar. Unfortunately, unless IB wants to be more specific with what commissions are charged when buying which funds, we have to rely on this and just hope the fees is what we expect. And did you notice that I didn't mention the entry and exit costs? Well, that's because apparently IB didn't charge me any additional fees other than the one I just mentioned. Of course, the €4.95 fee is also there when selling, but outside of that, there seems to be no other fee, even for the Swiss Canto. But please, do pay close attention to these fees, because if the fund gives a very small return, these fees will heavily impact your investment. For example, as I said, for the two Swiss franc mutual funds, it wouldn't make any sense to buy them if there were a 2% fee, let alone a 5% entry fee. You would need 2 to 5 years just to get back to zero. And that's a wrap up. Thank you so much for staying with me throughout today's episode. I wish you all a fantastic start of the week and stay tuned for the next episode of the Divity Radio Show.